Hey everyone, welcome back to the channel. Just wanted to do a quick video on some pretty interesting stuff Pierre Poilievre is saying. A lot of people butcher his name, can't get it right, especially Americans, but it's easy when you come from Quebec like me. But I figure I'd do a quick video on this because I've been getting some requests to cover this. Something very interesting. First of all, a politician talking about the TFSA and increasing it always has my attention. And also another policy I guess he's proposing or proposed if he wins the election, I guess, which is very, very soon. By the way, I'm filming this on March 31st, but I've only recently heard about these by you guys. So let's see what he says about the TFSA first of all.
Introducing the Canada First TFSA top-up. A common-sense Conservative government will let Canadians contribute an extra $5,000 to tax-free savings accounts for investments in Canadian companies. Here's how it would work.
Okay, in Canadian companies, right? You caught that, right? Makes sense, right? You want to keep the investments in Canada, you got to invest in Canadian companies.
Nothing about your existing TFSA would change. You would still get your normal $7,000 limit,
right,
which you can contribute and invest anywhere and however you like. What would change is that you could contribute an additional $5,000 a year as long as that $5,000 gets invested back into Canada, supporting Canadian companies that employ Canadian workers and pay Canadian taxes. The tax system already defines these kinds of Canadian investments, and my government will create a definition that will let financial institutions and advisors tell you which investments can go into your Canada First TFSA top-up. It will bring home billions of dollars of investment and jobs to Canada while bringing home savings for you. Money will rush into Canadian businesses who will in turn hire more people and pay more taxes, and it will help us become more self-reliant and sovereign as we stand.
Okay, so this is pretty straightforward and pretty interesting, guys, I have to admit. So normally you know, right now you get about $7,000 of extra TFSA room a year. And I guess what he's proposing is you could get an extra $5,000 if you invest that $5,000 in Canadian companies and Canadian businesses. And he said that he'll let financial institutions, so ETF providers, I'm guessing, are going to be included within that, obviously, which ones are eligible. So I'm assuming anything that's 100% Canada would be eligible. Now, I'm curious to know if something, for example, like a US ETF provider like Vanguard that only has, so like a Vanguard ETF that only has Canadian stocks in it. So something like a VDY comes to mind, right? VDY is the Vanguard Canadian High Dividend ETF. So this is a Vanguard is a US provider, US company, but the businesses inside that ETF, it's all Canadian stocks. So I'm wondering if that will apply also. Does the provider have to be Canadian as well, or it's just the businesses? But either way, even if the ETF provider, the financial institution, and the stocks have to be Canadian, this is great news because I think things like TSX 60 index from Global X, or a covered call version like CNCC, CNCL, something like Canadian Banks ETF, right? Like HCAL or Bank or Utes or Oily, ENCL, BKCL. So I think all of those should be eligible. And this is literally just $5,000 more of TFSA room, bringing it, if the baseline contribution stays at $7,000, bringing your contribution to $12,000. This will greatly increase your tax-free wealth and income every single year, which is absolutely amazing. So this is a pretty big deal. If you're a couple, that's like an extra $10,000 a year in the TFSA. This is huge. This is huge. A great policy, I have to admit, because if the money is being invested in Canadian businesses, you're technically helping Canada. So I guess the policy makes sense. So you know, the TFSA was created by the Conservative government, so I find it pretty cool that you know, maybe, I don't know if he's going to win or not, but the Conservative government once again is looking to expand on that. That's really cool for Canadian investors, to be honest with you. Another policy I think that he just came out with was, and this is even more crazy, more interesting, and more exciting if you ask me, no capital gains when you invest proceeds in Canada. Let's listen into the policy.
Now, I've already told you that I will reverse the Liberal capital gains tax hike But I will go further.
Okay, so we know that the Liberals want to increase the capital gains tax inclusion rate from 50% to 66%. But I believe that's only for transactions over 250,000. So I think it won't impact many people, like regular people. But it'll probably take I think that would impact businesses more, which will just discourage businesses even more from investing in Canada. But for regular people, I think unless you're selling a secondary house or something and you have a capital gain that's more than 250, it's kind of hard to declare capital gains of more than 250,000. So I think that that really only impacts businesses. But let's hear what his plan is here to have no capital gains tax.
Today I am announcing a plan to unlock billions of dollars in reinvestment to build Canada into an economic fortress against American threats. I will axe the tax on reinvestments in Canada. Here's how it works. Anyone who sells an asset will pay no capital gains tax on whatever proceeds they reinvest in Canada.
Holy smokes. So he showed the picture of a house. So if you sell your house and you have a big capital gain, let's say of 200,000, which pretty common in Canada because house prices have been rocketing, you could not pay capital gains?
You can choose to reinvest into Canadian businesses, Canadian stocks.
Canadian businesses, Canadian stocks. So reinvesting those capital gains in Canadian stocks is eligible, it seems like.
Canadian farms, Canadian home building, and other Canadian investments, fully tax deferred. Companies will get the same tax deferral.
Oh, tax deferred. Okay.
On any proceeds of sale they reinvest here in Canada. Canadians will only pay capital gains tax on accumulated gains when they cash out for good or take their money out of Canada. This tax break will be available for any capital gains reinvested between July 1st, 2025 to December 31st, 2026. But if it causes as big an economic boom as I expect, you know what? I'll make it permanent. The existing lifetime capital gains exemption for small business owners and farmers will remain unchanged, meaning they can benefit from both this new deferral and their existing exemption. Let's picture a few examples on how this would work in real life.
Okay.
A deli owner can sell and reinvest all the proceeds in a new Canadian company, deferring his taxes. A manufacturing business can reinvest in a new Canadian factory. A rental company can sell one building in order to reinvest in building more apartment complexes that Canadians can afford to live in. A Canadian company that has invested abroad will have a powerful incentive to bring home that investment and buy machines, technologies, factories, build pipelines, or do other things that generate growth and jobs here in Canada. This will bring home tens of billions of dollars of job-creating investment.
Wow. I mean, I don't think you could get any more patriotic than this. I'm getting like goosebumps listening to this. And obviously this is kind of like a commercial or whatnot. But from what I gather here, and it seems like there is a time limit, right? So what he says here is...
Tax break will be available for any capital gains reinvested between July 1st, 2025 to December 31st, 2025.
Okay, so there's a specific time frame, but he does end up saying if it's a success, he can make it permanent. So what I gather, and he says it's deferred. So I could be wrong about this, and guys, feel free to comment. I haven't really investigated or looked into this further. But it seems to me like you could pretty much defer all your capital gains no matter what it is. And remember, when you buy low and sell high a stock in your cash account, that's capital gains. When you sell your house at a profit, that's a capital gains. Of course, I know that if it's your primary residence, there's no capital gains. If it's an income house, I think there's a portion. There's only the rent, the portion that you're renting out that's eligible or that you need to pay capital gains on. But it seems like this is going for all capital gains, which includes covered call income, because a lot of that income is going to be capital gains, right? Because covered call income or option income in Canada is capital gains. So I think what he's saying is, let's say you have $10,000 of capital gains. If you invest that $10,000 in Canadian stocks, maybe like a bank ETF or a UTS ETF, something like an HDIV will probably not be eligible because it's not 100% Canadian, but something like an HMAX would be, I guess if it's 100% Canadian, it should be eligible, but there's plenty of great Canadian options and income ETFs out there. There's so many of them, growth ones as well. VDY hopefully should be eligible, but maybe because Vanguard manages, it won't be. I don't know, but I'm sure we'll know which ones are. Anyway, I digress here. I'm going down the rabbit hole, but I'm guessing if you have $10,000 capital gain, you put that $10,000 in bank, and you defer the taxes on that capital gain till later. It sounds to me like maybe it's kind of the same concept of the RSP, where you're deferring. So you basically could grow your wealth quicker like this. And this is real wealth really quick, because if this is for all capital gains, this is incredible. This could motivate people to do business in Canada, not hesitate to sell their stuff, and right away reinvest in Canadian stocks, and which means you're reinvesting in Canadian businesses. So like he said, this could really grow the economy, the Canadian economy over time. And if it works, he'll make this permanent. And then you just defer it until, I guess, you sell your asset, maybe. I'm assuming just like the RSP, you would want to defer it when you're retired, when you're in a lower tax bracket, so you pay less capital gains anyway. But this is a really novel idea. Pretty crazy stuff. I'm shocked, honestly. These are great policies. The TFSA one is the easiest one to think about. Think of it just like extra 5K every year if you put it in Canadian businesses. But this one could be absolutely huge. Don't pay capital gains if you reinvest it all in Canadian businesses. So these are, finally a politician is kind of speaking my language, talking about, pandering, I guess, a little bit more towards the investor, business owner, stuff like that. Let's see. I mean, is there more examples here? There was a deli owner.
A Canadian company that has invested abroad will have a powerful incentive to bring home that investment and buy machines, technologies, factories, build pipelines, or do other things that generate growth and jobs here in Canada. This will bring home tens of billions of dollars of job-creating investment. Here's the thing. Government will still get its share, but later and bigger, when investors actually...
Right, okay, so later. So it is deferred, and you will have to end up paying the taxes, but later. Bigger, why does he say bigger? Well, let's see what he says.
Cash out for good without reinvesting, they will pay capital gains tax on all of their investment gains. Meanwhile, the extra investment that will result from this policy will create more jobs and growth, making up for much of the government's short-term lost revenue. My plan to axe
Okay, that makes sense, because if they're deferring it when you're reinvesting in Canada, Canadian stocks, Canadian businesses, it's still... They pay tax as well, and if they're going to grow their operations and hire more people, that's more tax revenue. So he's saying there could be a short-term hit for the government not getting those taxes, but they'll get more later. That makes sense.
Tax on reinvestment will reward those who put their money to work here. We need to bring it home to reverse the lost Liberal decade in which Canada had the worst GDP growth of all of our competitors. We're projected to have the worst growth among all of the nations of the OECD over the next 30 years. Under this Liberal government, $500 billion more Canadian investment is left to the U.S. than has come back. That equals $11,500 per Canadian. Imagine $500 billion of Canadian money building mines, pipelines, factories, and business centers for American workers. Let's bring it home. In 2023, Canadian workers got just 58 cents of investment for every dollar a U.S. worker got. And under the Liberals, we've had the worst per-person economic growth among all our competitors. And all of that was before Trump's tariff. But don't take my word for it.
So our economy was weak before we got to the point of these threats from President Trump.
And that comes from Mark Carney, the very guy who moved his corporate headquarters out of Canada to New York, taking Canadian jobs to the U.S.
It's true. I didn't even know that. So Mark Carney, which is the new PM now, who was Trudeau's economic advisor, he's an owner on the board of Brookfield, a pretty big company, and they moved the headquarters to New York. I don't know if that's true or not, guys. I heard about it, but either way, I don't really care about that. Again, this channel is never really going to be about politics, but this has to do with investing. These two policies are very, very interesting for us investors. And I'm not a Canadian resident anymore, but if I was a Canadian resident, this is very, very, very exciting. This is a great way to build. I mean, it's a known fact that the TFSA is by far the best account ever, right? It's the most critical tool we have to build wealth tax-free. Everything in there grows tax-free. That's why they're so strict with the room. an extra 5K every year for you, for your spouse, for your children over 18, that's a big accelerator to build wealth, especially if you could invest in Canadian stocks like the banks, which are good investments over time. I mean, nothing beats the S&P 500, but hey, the Canadian stock market doesn't beat the S&P 500 over time, but it's pretty close. It's pretty, it's better than the European stock market and emerging markets. It's pretty good, especially the Canadian banks. I recently did a video why I'm ditching Canadian stocks, and in there I show that, nothing beats the S&P, but the Canadian banks are pretty high up there. The Canadian banks, Canadian financials tend to beat the overall Canadian market over time. So this is something you could invest in. This is really interesting, guys. I mean, an extra 5K of TFSA room every year. Obviously, Pierre's bringing out the big guns a month before the election. I think the election's in the end of April. But this year, you could defer all your capital gains tax. Holy smokes. This is very interesting, especially for us income investors, because we pay in the cash account most of the income. A lot of the income is capital gains or ROC, and ROC is the late capital gains when you sell. So I consider it under the capital gains umbrella. So if you could defer that till later for when you're in a lower tax bracket just by reinvesting, that's incredible. That could really accelerate your investments, your portfolio. That's crazy. And can motivate someone to sell an income house, invest it all the capital gain. So I see a lot of cool options here with this rule. But obviously it's really big and significant that he actually put a time limit on it. But he does say, this is a politician promise. We know how those are. But he does say, I'll make it permanent if it works. I think it'll really work. But if Pierre comes into power and he enforces this, or he does this policy, that time frame, that's a lot of people are going to want to generate capital gains and maybe sell their house and sell their businesses. This could be a very interesting time, because now you could reinvest it all. You could defer all those taxes by reinvesting in Canadian stocks, which could be, very high yield as well. Like bank, and the Canadian bank stocks have good dividends and stuff. So yeah, I'm talking to myself here, guys, and as well as to you. But tell me what you think. Let me know what your comments are. Do I have any of it wrong? My assumption, again, I've only watched this once now. The TFSA one is easy to understand. The capital gains are a little bit more complicated. It seems like it's deferred, but either way, pretty cool and very patriotic. I mean, this is the most pro-Canada thing. You want to grow your investments and save on taxes, you got to reinvest in Canada. We've heard, I've heard a lot that even the big pension funds in Canada are going more and more towards the U.S. stocks. So this could be a way to really motivate massive investments back in Canadian companies and Canadian banks and oil companies, energy companies, mining companies, Shopify. And when they have, and businesses have big incentives too, and what happens is they expand, they hire people, they expand their business. They, like Pierre said, they buy Canadian manufacturing instead of looking south of the border. It's a big motivator. So I think this is all in all is two great policies. Finally, some policies that I like as an investor that are investor related. So we'll see maybe if he comes out with more of these. But this is pretty exciting, guys. So this is pretty good. This is pretty good stuff here. So let me know what you think about this, if I got anything wrong. But this is pretty exciting stuff if you ask me. Just another way to increase your wealth over time as a Canadian. We know in Canada there's very high taxes and stuff, but now if you could defer capital gains, if you get extra TFSA room, well, now it's a different story, because you get more of that tax-free compounding effect, which is pretty incredible. So yeah, give me a thumbs up if you like this type of video, and if you want me to react more on these types. Again, I don't really want to do political stuff, but if it has to do really with investing, this is really directly with investing. Give me some suggestions on other videos you want me to see and review. And thanks for your support and watching. Take care, guys.